let's get across more of that move there, and of course what we're watching on Wall Street. Alan Nuckman, Chief Options Strategist at Bullseye Options, joins us now live from Chicago. Alan, a pleasure to have you on board with us this morning. Thank you so much for joining us. Now, we have been watching that cautious tone being struck on those US markets there today, and subsequently we have seen quite a strong move upwards for that VIX index.
Yeah, the VIX has not made new lows, though the stock market's made new highs each week, each day. So it's 7 straight weeks of positive action in the S&P. But it's been a long time since we've seen those extreme lows down at 884 in the VIX. And so it's a bit of a disconnect. Now, we do want to remember, though, last week we saw a good example of when the VIX spiked up to 1320, it got whacked right back down again, and it was below 10. So every time it does have a little VIX explosion, it comes back down to earth. The trend is still very much down in the VIX, but it is interesting that it is so significantly off those lows. The VIX last week was a little bit negative, and it gave back those quick gains, as happens almost every single time.
Now, we've been watching those tech stocks because we've seen another gain in this session, extending the rally that we saw there on Friday. I think the Nasdaq is heading for its 62nd closing high this year, so it's pretty incredible. Just your thought on that. Given that earnings here seem to be justifying these lofty valuations, do you think we have some more in it for those tech stocks?
Definitely. It's not over. We have Apple this week, but let's talk about what happened last week. So you had Amazon, Alphabet, Microsoft, and Intel all had blowout amazing earnings. That's what justifies these high stock prices. And that's just where we are. Don't doubt tech. This week we get Apple. Now, it's interesting that a lot of this action has happened while Apple has been kind of left out of this rally. It did have a little bit of a bounce last week as the new phone got unleashed here in America. So we're near those highs, but this has all happened without Apple. So if Apple can start to participate, then you're going to see continued gains. Again, very, very simple measured move technique. Take the distance of the sell-off that we saw in the Nasdaq, add that on top of those old highs, and that'll give us our next measured move projected objective. So we still have a ways to go up above.
Just with the Apple result, look, we have seen a pretty strong move up there today, as you say. There's been some research notes coming out pointing to that strong demand for the iPhone X. We know that the iPhone 8 didn't go down all that well. Sales, demand, revenue was weaker for the iPhone 8. Do you think it's going to be somewhat of a different story now for the iPhone X or the iPhone 10, if you like? What is the expectation for the result this week?
Well, I think it had very positive action on Friday because of this phone launch. And, I think a lot of people waited for the price differential for a couple $100 more. They could get this super phone as opposed to just the iPhone 8. And I think that's really what happened. Again, who wants to doubt Apple? I certainly don't, just like we would with a lot of these stocks that, continue to make new highs. Just because they're at high levels don't mean they can't go higher. Doesn't mean that you can't make money. If you're going to buy high, look to sell higher. That's just a corollary on the buy low, sell high. Buy high, but sell it higher. There's still opportunity here. I think there are some other sectors that I think that are coming into play that offer better reward to risk. A great example is oil. Oil just made year highs here in America on Friday, broke out above the $53 level, and we're trading at 54. So a lot of oil earnings are happening now, and I think some of those beaten down stocks offer some better value, I think, for the long term.
What about for some of the retailers, Alan? I was watching some broker notes coming through today, a couple of downgrades that have weighed on some of those shares of the retailers. Having a look here at Citigroup, they've downgraded JCPenney. I think the stock slid almost 9%. And Macy's also being downgraded, both of those being downgraded to a sell from Citigroup. I think Macy's slid about 4%. What is your thought on the retail stocks right now? Do you think there's opportunity there or too much risk for you?
It's very hit and miss. I liked Target a couple weeks ago, and it's had a nice, healthy rally. It looks like that's breaking out. I don't consider Starbucks retail, so to speak. It's coffee. But I think Starbucks is looking to break out of a bottom base as well. But when you're talking about the downgrades in JCPenney was a $4 stock before, and after it sells off, now they downgrade it. I don't know if that offers any value to investors to have the analysts even comment after the fact. So it is what it is. Some of those retailers, may offer some value, but it's very, very tough business picking those individual stocks that are going to perform in this environment, in the Amazonification of America.
Just a general thought on earnings so far, Alan. I know we obviously spoke to you last week about this. We're a bit more of the way through earnings season. Thumbs up. Looks like you've, taken a positive note on it, I guess. What are your thoughts on it?
And this is what we were looking for. We had low expectations of earnings growth of about 2%. It looks like we're double that right now, about 5%, and we're at the halfway point. So 76% of the companies have exceeded their EPS, and 67 have exceeded their revenues for the S&P 500 stocks. So I think we're on a great path. And if we look out to the next quarters, the next 3 quarters, we're expecting earnings growth at 10%. So that's why the stock market is where it is, because this earnings growth continues, and that justifies these high stock prices.
Just one final thought. We saw some news today of Donald Trump's tax plan, this gradual phase-in, if you like, and the market did sell off as a result. But up until now, we know hopes of tax cut and tax reform have really sent stocks higher. Would a failure by the Republicans to pass any sort of tax plan actually see stocks tumble? I know you're always very optimistic about the market sort of continuing its trend higher, but what about if we don't get that tax reform? Would we see stocks coming under pressure then?
I don't even think that would cause this market to pause. Again, we just talked about earnings. We just talked about earnings growth. And if you look at the action over the last 8 years, that's what's driven this recovery. That continues to happen. When that changes or interest rates change and there's a choice between going into treasuries or stocks, then maybe this environment will change and the trend will change. But until then, no, I don't think so. It is just an extra cherry on top when we do get these tax cuts. Something will happen, and it will be a benefit to the market, if nothing else.
All right, fantastic. Alan Nachman, always appreciate talking with you. Thank you so much for joining us.